Welcome back to my Robinhood portfolio that I've been investing in for about 7 years now. And as some of you might know, when I first started investing, I was very ignorant to the stock market. I didn't really have a clue what I was doing. So a lot of mistakes were made early on that cost me a lot of money, with a lot of missed opportunities as well. But honestly, that's the beauty of investing, right? Everyone is sort of on their own investing journey and has their own investing style. So it took me a couple of years to kind of figure out what works best for me. And again, through that process, there were some pretty big mistakes made. So it's almost kind of funny looking at my all-time return and seeing that even from around 2019 through 2021, when the stock market was going through kind of an aggressive bull run, where basically any stock was going up, I was still losing money during that time. So it's kind of funny to see that, but then eventually I started to sort of figure it out a little bit more and invest into quality companies and diversify and mitigate risk. So my total all-time return is only 10.33% when it really could be over 100%. But as of recently, we're in a lot better of a spot with a 1-year return of 28% and a year-to-date return of 20.2%. So I beat the S&P 500 in 2023, and I'm currently beating the S&P 500 in 2024 by about 5 percentage points. We also finally hit that $100,000 account value goal, which is a pretty huge milestone because it's the goal I set when I first started this YouTube channel. So it's been a long time coming and we finally hit that goal. So now it's on to the next goal of, I don't know, let's say 500,000. So now jumping into the holdings, I don't think I'm going to spend too much time on the top holdings because I feel like it's a little redundant at this point, because basically every update I do, I talk about the top holdings and they're essentially the same every time because they're my long-term holds and I've also owned them for multiple years. Starting with the first one, Microsoft, with the most weighting at 11.29% of the portfolio, or a market value of about $13,000 and a total return of 26%. Next, we have Apple at just under 11% of the portfolio and also a 26% return. Then we have Nvidia, which at one point was a lot lower down the list, but as I've been dollar cost averaging into this position, as well as the stock price going parabolic this year, it's jumped up to number 3 in the portfolio. So going forward with Nvidia, I know it's kind of a controversial stock at this point. I personally think it does still have room to grow over the next couple of years as the demand for AI products stays high, and Nvidia, of course, is kind of the leader in that space. And especially with this major pullback that we've seen in the semiconductor sector, I'll most likely be buying even more shares in the short term. So Nvidia makes up 8.1% of the portfolio with a total return of around 27%. Next, we have Broadcom, another semiconductor company that makes up 7% of the portfolio with a nice return of 41%. Then there's Costco at 4.75% weighting with a 64% return. And Costco is one that's been in the portfolio for quite a long time now, and at these levels I do think it's a little overvalued and overbought. But in my own opinion, I think it's a perfect stock to continue dollar cost averaging into over the long term. So these next 3 are semiconductor companies that all specialize in chip production and design. And like I mentioned earlier, the semiconductor sector has taken a pretty big hit this month, with Synopsys being down 8.8%, Cadence Design Systems down 14%, and KLA down 11%. So now this might present a good opportunity to buy even more shares of these companies and increase the current positions that I have in them. So currently Synopsys makes up 4.62% of the portfolio with about a 16% return. Cadence Design Systems makes up 4.6% as well with a 17% return. And KLA makes up under 4% of the portfolio with only a 4% return. Next, we have Cintas, another fairly old holding in the portfolio. I've owned it for about 3 years now, and I'll continue to dollar cost average into the stock because I think it's a great long-term buy and hold type of company. So Cintas makes up 3.7% of the portfolio with around a 61% return. Moving on, we have Google at 3.5% of the portfolio, and as a YouTuber, I'm going to be a little more biased, but I think Google is a great company with a lot more room to grow, especially with its multiple revenue streams and its implementation of Gemini AI. I think it's a company that will continue to grow year over year and into the medium to long term. Arthur J. Gallagher, just a very powerful yet old school insurance company at 3.2% of the portfolio and just under a 30% return. QLD makes up 3%, and when I got into this one, stocks were extremely low. This was back in 2022, making my average costs nice and low, so my total return is 112%, but a lot of that is due to just really good timing. We have AMD that's actually been performing very, very poorly this year, especially compared to its peers. Its year-to-date return is only 4.7%, which of course is better than having a negative return, right? But basically any other chip company this year is up 30 to 50%. So comparably, AMD is not doing well at all this year. So my return is a negative 7% right now, and I won't be buying too aggressively into AMD in the near future, but I am planning on holding for at least another year or two. The next one is PBR, or Petrobras, and I don't need to really spend any time on this one because I just made a video about this specific position and how much I've made in dividends since I owned it. So I'll link that video in the corner of this screen, and you can go watch that if you're interested. Now, these next few are going to be a little more speculative and higher risk since they don't make up too much of the portfolio. We have Vertiv, or VRT, that makes up 2% of the portfolio. This is a company that, in simple terms, creates technology that helps data centers and other industrial facilities run smoothly. And there's been a lot of demand for this company's products because of the AI hype that we've seen. And I believe that at least in the short to medium term, it will continue to perform and produce high returns. So I might be buying a few more shares of VRT in the near future and kind of see how it performs over the next 1 to 2 years. Berkshire Hathaway is definitely not high risk in my opinion. I think it's a great long-term buy and hold, just a really classic, solid, wide moat company that I'll probably have in the portfolio forever. Arista Networks at 2% weighting as well, and another high momentum stock with a year-to-date return of 41%. This is a cloud networking company that I'm planning on holding for at least another year or two, or possibly longer. Celestica is a tech company specializing in supply chain automation, and also a little bit higher risk, but again, I'm not a trader. I invest in companies for at least 1 year's time. And this was a recent addition, so I'll be holding this stock for at least 12 more months. Going down the list, we have Meta, or formerly Facebook, at 1.76% weighting and a nice little 5.5% return. Palo Alto Networks, or PANW, this is a cloud network security company with a 24% return. Next we have Progressive, another large insurance company that's almost a monopoly at this point, right? It's up there with Geico and Allstate, and it's been around for a really long time. They have a huge marketing spend as well. I'm sure we've all seen their commercials, but it's also a really profitable company. So it's one that I actually wish I would have bought a long time ago, but I am planning on holding this company for as long as possible. So I own Berkshire Hathaway that we just looked at, who owns Geico, and then Arthur J. Gallagher, that's a huge position in the portfolio, and now Progressive. So as you can tell, I am very bullish on insurance companies. Now there's so many holdings in my portfolio. I think we're up to about 47 now, so it's kind of hard to go through every single one of them, but I will kind of scroll for you guys to see all of these different stocks towards the bottom. Now, a lot of these are kind of a mix between stocks that I'm either slowly weeding out of the portfolio and selling off, or just very volatile and higher risk stocks that I don't want taking up too much of the portfolio. And then we have stocks like Murphy down here at the very bottom that I literally bought yesterday, so I only have about $100 worth, and it will probably make its way up towards the middle as I dollar cost average into it. I know you guys will most likely have your opinions and thoughts about my portfolio, so make sure to leave them in the comments below. And I really hope you guys enjoy these updates every few months, so make sure to stay tuned for the next one, and I'll see you next time.